Hi guys, how are you? This is Yishai Breslauer, your host of the CRE Shark Eye show that focuses on commercial real estate. And today we have a special guest. David Kaufman is with us all the way from Colorado. As he said, if I open the window, we'll see the Rocky Mountains, which is beautiful that you were out there. And thank you for being with us, David. Thank you so much for your time. I appreciate it.
Thank you for having me on your podcast, Yishai.
100%. And you know what? Before with the start, I would, I know you're 25 years old. I can see you, and I can tell that you probably have a bunch of experience in your life. And
I was 25 when the Dead Sea was only sick.
So exactly. So what we want to do today is learn from you, sir, and we'll have that honor of having you today, and your experience, and that's what we want to do. So and I know you'll have tons of experience, years of experience, and that's what we're going to talk about. So let's start with, first of all, with what I know that what you do today is multifamily. And you know what? I thought of starting with that, but since we have a lot to cover, as we call it, let's start with how all the way back, how you started out getting into real estate. How did it all start for you, and when and how? How'd you get into this?
It's interesting. That's a great question. In 1967.
Wow, what a year.
Yeah, really. Well, my father had passed away in 61 or 2. And I was 17 years old. My mother looked around for ways of supporting the family. We didn't come from a lot of money. And she found she's a natural salesperson. And she sold World Book, an encyclopedia for a while. She sold premiums, and then she found real estate. And she went into real estate. And I was a senior and junior in college. And graduating, it was about 67. And she said, you ought to consider getting into the real estate. I really like the business, and it's a good business. Wish my father had known about the business. And so I went to, at the time, all you needed was a college degree, and you could sit for the broker's exam. So I got my first real estate license in 1967. I wound up getting about 30 real estate licenses. I used to have one employee that just kept track of all my licenses. So over the years, I picked up more licenses as I was doing business in other states. I did commercial investment brokerages starting back in 1970. And then matriculated into auctions of real estate, which is highly misunderstood. There's times when it's great to use an auction. There's times when you want to run from an auction. And it's good to know which situation fits which outcome. And it's fairly easy to tell that too. But just to finish up on the previous thought, I did auctions, and then in 1998 or so, I started syndicating real estate. We had a portfolio of a couple 100,000 square feet of shopping centers, office buildings, industrials, no apartments. But I always, personally, I owned apartments without investors. And that organization was called the Halyard Group, and we would syndicate as most syndicators do. We sold all our product lines, and after that, I continued to do auctions here and there. I auctioned off, we lived for 12 years in the British Virgin Islands on the island of Tortola. And while down there, believe it or not, some great business came from LinkedIn and knowing how to use LinkedIn. I wound up auctioning off the Temenos Resort and also probably the number one resort in the world is Capjaluca, and I auctioned that off in 2012. And I've done onesies, twosies here and there. I still keep my hand in the auction business. I'm affiliated with a company out here that does real estate and personal property auctions. But after about, I would say 2015, I just stuck to owning apartment properties and transacting apartment property deals, and that's what I've done. That's how I got here.
That's how you got there. Very, very interesting. And I want to tell you, you have so many experience, obviously, with different asset classes, and that's very interesting to hear. Let me ask you this: when you did retail, where was that, by the way? You know, all those hundreds of plus square footage shopping centers, etc., or industrial. Where was that?
The shopping centers were primarily in the Midwest. We own some in Wisconsin, we own some in Rockford, Illinois, and some in Chicago. And our timing was good. We did quite well on shopping center properties, but I'd rather be lucky than good. One shopping center we bought for $10.25 million, and it was brand new construction. It was a Best Buy anchor. Had another store, linens and things, and then a Hallmark card store, and one empty store. And so we completed the construction on the empty store. We put in a hair cuttery in there, and we owned it for a couple of years. And we were approached by a very, very large REIT, and they said, "We want to buy your Perryville shopping center in Rockford." And our comment was, "We've only owned it for a year." Okay, 2 years. It was 2 years.
Yeah.
We don't want to sell it. The cash flow's coming in. Everything's rosy and
great.
what have you. And they said, "No, you don't understand. We're going to buy it. We're just going to offer you so much money that you're going to sell it to us." And they did. And so we sold it for $14.5 million or so. And it was a nice profit in just 2 years. The investors were upset because they wanted to hold on to the property.
Right.
They didn't want
the cash
to realize
flow.
they didn't want to realize a capital gain. You know, their comment was, "What are we going to do with the money? Why are you selling this?" Okay. 6 months after we sold it, Linens and Things went bankrupt. Okay. And we would have been stuck with it would have been difficult.
It's unbelievable.
Yeah. So our timing was amazing. You know, no one was, you know, it's not because we were smart.
Sometimes being lucky is better, without a doubt.
Yeah. You know, I also like the old saying in real estate, you know, everything is about location, location, location.
Exactly, yeah.
Nothing's further from the truth. There's only two important things in real estate, and that's location and timing. And if you haven't got the timing, you're cooked.
Are you still involved in retail and industrial, or you moved completely to apartments?
No.
Multifamily.
We sold everything else that we own and just kept, we sold everything that we owned in the syndication operation, the Hallmark Halyard Group. Nobody knows what a halyard is, by the way. Do you know what a halyard is?
Yeah, tell me.
Okay. A halyard is a rope that goes up to the top of the mast, comes down on the other side. You tie it to the top of your sail, and then you pull up this, okay, and it raises the sail. Okay, so that's what a halyard is. If you're a sailor, you might. If you're not a sailor, you might find.
I'm not a sailor. I know how to swim, but that's it.
It also raises a flag. Okay, so
yes.
Either a flag or a sail.
So anyways, all these years of doing all these different things, you moved up, and I want to ask you a very, very good question, because you started as a broker, and as you have mentioned, you have licenses in different states, and you even hired a person to actually keep track of all those licenses that you had.
Yes.
And probably still have.
I don't have any. I have no licenses
You have
at
no
this point.
licenses anymore, right?
No,
Because
no.
and that's what I want to ask you. When was the point that you moved from being David Kaufman, the broker, and you said, no more of that, I want to become an owner? What was that point? When was that point? And
Well,
what went in you when you got to this conclusion?
well, brokers die broke. Okay. Uh, if you're in the real estate business, you don't want to wear your raincoat in the shower. You want the water to fall on your body. So, and the only way to do that is by owning real estate. You can be the best broker in the world and generate millions in commissions. It's all taxable at passive and ordinary income tax rates, which are very high. So it's best to own it as capital gains. Properties, when you own properties and you sell them, it's capital gains that you'll receive. Of course, Mr. Biden is going to totally destroy that. And as a result of destroying
that's a whole different conversation of its own, right?
yeah, as a result of destroying that, he's going to reduce the amount of income into the Treasury because there'll be fewer transactions, more people. There's no reason to sell real estate. Once you own a piece of real estate, you keep it. Why would you sell something? The only reason I sold my properties in Chicago is because I saw that Lori Lightfoot, the mayor there, is coming off the rails. The city is bankrupt. The crime rates are absolutely soaring, and it's just not a place that you want to own real estate. So I sold it, and I'm very happy that I did so. And of course, I didn't want to pay taxes on it because the particular two properties that I sold, one I owned 15 years, the other one I owned 30 years. That's a long holding time, and there was a lot of equity there. I had an extremely low adjusted cost basis, had to do with a tax deferred exchange under IRC 1031. And traded for apartment properties here in Englewood, Colorado.
Which sounds like a much better market, obviously.
Oh, it's Colorado is a wonderful marketplace, but it won't be for long. Colorado has the beauty of the mountains and all the athletic things going for it, but it still has the beauty. And it's the choice of all the Californians to move to Colorado. And therefore, the demand right at this point in time is really strong. And I think we'll ride that rocket for the next 10 years, 15 years. But after that, it might, as beautiful as California is, people are leaving in droves. Why? Because of the crime, because of the
policies,
economy. So they're getting out of there. And they're coming here.
Certain cities, and I talk a lot about New York City and everything that goes on there, and you can't keep away of what it does to real estate. And I usually don't talk politics, but I definitely talk real estate. And those actions that you spoke about are definitely damaging real estate and damaging investors and damaging everyone who is looking into getting into those investments in those locations.
Well,
they will think twice. And they will run away from places that their assets are not going to make money in the way
that's exactly right. I caught your last podcast. I forget who you had on.
Shimon Shkuri, I think it was. I can't remember.
Yeah, but it was. I just watched it 2 days ago. In any event, he was talking about investing in New York City. Why would anybody invest in New York City where there's rent controls? When there's rent controls, that turns neighborhoods into slums because the landlords don't spend money if they can't raise the rent and recapture their capital expenditures.
Exactly.
And that kills the future of an investment. I mean, if you want to live in New York City, live in New York City. But invest in an apartment building in Cheyenne, Wyoming, or Oklahoma City, or down in Houston, or Florida. So those are much better markets, and they'll continue to maintain their values a lot longer. You know, one of the
No, go ahead. Go ahead. Go ahead. I want to hear you. Yeah, go ahead.
well, one of the things that I've learned over the years is that you know, everybody is focused on what cap rates are, and they you know, this is selling at a 4 cap rate, and this is selling at a 7% cap rate. When I got into the business, it was a 10% cap rate. Everything was 10%. Cash flow was 10%. Cap rates were 10%. Loan constants were 10%. So you broke even on the money that you borrowed. It gave you some tax benefits of interest write-off and what have you. But for the most part, you know, when you buy an investment property, you want to you want to take a look and see if the loan constant is greater or lesser than the cap rate. Because
100%.
if the loan constant is less than the cap rate, then you'll make money on the money you borrow. But if it's the other way around, if your loan constant is higher than your cap rate, you're going to lose money on the money you borrowed.
Right. No matter how great the cap rate is.
And you're better off buying for cash in those situations, which basically I'm doing out here right now. I bought this apartment building. It's a fairly low cap rate, 45 apartments, and I'm only borrowing 23% of the acquisition. So I have almost no leverage there because the loan constant does exceed the cap rate. And so just something, and also when you talk about cap rates, everybody is focused on the empirical cap rate. The empirical cap rate is that which is observed in the marketplace. So you look over at this comp, and that comp sold for 7, and that comp sold for such and such, and the number of years left on the lease was so and so. All those factors need to be taken into consideration,
Exactly.
which one of them is politics. But the empirical cap rate is really not the holy grail that it's made out to be. I think the more important cap rate is the hypothetical cap rate, where you look at an investment and you structure your own cap rate. So a cap rate is basically return of and return on investment. The return of is simply the 100% divided by the useful life of the property. So if it's 40 years is the useful life, or you see it that way, then it would be 40 into 100, it's 2.5%. That's part of your cap rate. That's the cornerstone of the cap rate. Then you got return on investment. Return on investment is made up of 4 different things. I don't know if I can remember. Loss of liquidity, management, okay, and not necessarily property management, but the fact that the owner has to take time to oversee their investment. So I guess it's more asset management. So safe rate, loss of management, loss of liquidity. You can't sell a piece of real estate in a heartbeat. I can by auctioning it. Okay, so that reduces that.
We're going to get to talk about that too. Yeah.
Of the cap rate. And then the last aspect of the cap rate it escapes me at the moment. But why is the hypothetical cap rate important? Because if you're in a marketplace where certain aspects, certain components of the cap rate are different than what you're seeing out there. So in other words, if you see interest rates are going to be going up, okay, which the school's out on whether they're going up or down, and nobody knows right now. I think they're going to try and keep them low, but if you're in that marketplace, your cap rate might be very much higher than the one that you perceive empirically in the marketplace, and therefore that's a good time to lay low and not be getting into the real estate game. But so it's something that I think is ignored by a lot of investors.
But I just want to jump in on that. And today, by the way, when we look at investment, um, and you have the different, I would call it the different classes of people, not assets, that look at investment. And the cap rate is more looked like on those individuals who go in syndication, et cetera. But today's world, with the sophistication and all those spreadsheets that are going around and the numbers, and to have the back of the envelope, which was not bad, by the way, of the past,
Worked
uh,
great.
was great. But today you have all those aspects and models and IRRs and NOIs and different ways to look at it. The cap rate is sort of moved aside to the discussion about what am I making on my money, which is IRR, which is to the opinions of many old timers. I would like to hear your take on that. Many old timers are telling me IRR is baloney, and it is in a way, but there's no other way to look at what your money might make in the future otherwise than looking at IRRs, and seeing today what the NOI gives you nowadays with the T12, or sometimes is you looking back in 3 years back or 4 years back in a property, right? And what they're making, et cetera, and seeing what the NOI is and how I can play with the numbers, whether it's expensive or increased rents or whatever it is, or better management, whatever it is, and then play with that. And the cap rate comes on top of everything to tell you, here's my property, but here are the details. And that's how you run the whole, this whole show that is called real estate, that is called acquisitions. What is your take on all this modern way of doing things, which is basically, meaning I was a CEO of a company for 2 years. We did that. That was the way we did things, also as a private equity firm. But what is your take on that versus the old time, back of the envelope, a guy
Well,
does this and I'm buying?
yeah, well, that was Sam Zell. Sam Zell didn't go into 23rd degree laser analysis. I love the term analysis paralysis. So if you're going to analyze things so thoroughly and deeply, you want a sanity test. And the sanity test is the back of the envelope. Okay, and that gives you the bigger picture. Do you want to consider the internal rate of return? I love it how brokers today present properties to me, and they show that I'm getting the cash flow of so much, plus I'm also getting the depreciation, not depreciation, the amortization of so much. Okay, and the profit of so much when I sell it. Well, you don't get those things until you actually sell the property. So it's a future value. The
And
only thing that counts right now is cash flow.
let me jump on that just for a second. It's a great point, by the way. First of all, I appreciate the brokers who give me in a broken down way the things, but usually what we used to do basically, and I still do that, by the way, when I get a property or I get someone to send me this beautiful PDF with all those nicest pictures, those beautiful things and those numbers that look spectacular, I always ask for the Excel. I always ask for an actual spreadsheet. And then we dwell into the numbers, and then we look into the assumptions ourselves, into the comps ourselves, and then we see if the numbers are real, and then we play with the numbers. So that's the way I would say to take the broker's, data and then breaking it down. But I love the way you just put it. All these beautiful numbers, I'll know in the end when I'm selling it.
Well, yeah, but that's why IRR is an important number, because it does take into consideration that you're going to pay down the mortgage hundreds of thousands of dollars, and that you are going to sell it at a higher value just by you use a cap rate, the same cap rate as you're buying it, and you project what the net operating income is going to be in year 7 or 10 or whatever it is, and you have an idea of what those future numbers are going to be. It's important to know that. But what I've always found is the past is not necessarily a guarantee of the future, but what I've always found is the property always works out better than the initial numbers.
How come in your case?
Well, I don't know. I think it's in everybody's case. That's the way, at least apartment properties. Shopping centers used to be this way, but shopping centers, that's a dead industry as far as I'm concerned. The internet killed it. Amazon just rolled over shopping centers, unless you have a grocery anchored shopping center.
Right. There's a way, and we had few guests that are really dwelled in this sector, and they educated us with how they do it, which they have to be really on top of what the market is and where Amazon is not going to kill, and what type of industries are still alive, like restaurants, like et cetera.
That's why you're seeing shopping centers filling up with restaurants, grocery stores, nail salons, chiropractors, and dentists.
Gyms.
Gyms. That's not the kind of shopping center that I want to own. Yeah. So
it's to be very different.
But I've always found that when I go into a real estate, into an apartment property investment, that the rents go up faster than I had planned, than I had projected. The neighborhoods get better. Here's a secret to investing in real estate, as far as I'm concerned. It's my artist model. You want to always have friends that are artists. Okay, because the artists, they're broke. They can't afford to live anywhere ritzy. So they go to an absolute horrible part of town, regardless of what town it is, and they set up shop. Okay, and I mean, it's crime ridden and it's the worst part of town. Okay, but when the artists get there, all of a sudden it starts attracting the people who want to buy things from artists. Okay, and so people with money come into that neighborhood and start buying things, and before you know it, the shishi little restaurants begin to open up, and vieux care trade comes in, the wealthy money, and people all of a sudden say, hey, this neighborhood is hip, I want to live here. And all of a sudden they start buying things up, and they gentrify the neighborhood, and before you know it, the artists can't afford to live there. And so they
move back to another.
Yeah. I mean,
right.
I remember when I was in New York not too long ago, there was the meatpacking district, and that was the hottest residential district in New York. It was a meatpacking.
I'll tell you a story in a second about New York, but yeah, go ahead.
Yeah.
I don't know exactly what you're referring. Yeah.
So in any event, people follow art, and art and culture. When you see that come into a neighborhood, that's a good place to focus and to buy, and you're going to have a better upside there.
That's a great secret, by the way. That's a great secret, and thank you for sharing it with us. Just a quick note on what you said about New York. In the past, what I know personally, some stories, and I shared it in the past, about people in New York who bought buildings in a so-called bad neighborhood, and then that became the Upper East and Upper West Side, and whatever it became. So we know that the gentrification actually it being caused, but that secret about having artists moving to a place and then buying it from them, or getting into where they're going, like Wayne Gretzky says, go where the pack is going. I love that.
Yeah. Well, the action goes to where the culture flows.
Exactly. Exactly.
There was a great example of that, of course, is your most famous syndicator, who you may or may not have heard of, by name, I think his first name was Bill or Harry Zeckendorf. You ever hear that name, Zeckendorf?
Yes.
Zeckendorf.
Yes, of course.
He bought up all the land where the United Nations is located.
Yes.
And he bought up everything around it. It was just total slums. And he acquired all that land, and then he gave the heart of it to the United Nations. Well, all the property around it just, took
Yeah,
off.
skyrocketed.
The best real estate deal ever. But he was once a speaker at some convention, and they asked him, what's the best investment a person can put their money in? And his answer was not real estate. His answer was great artwork. He says, because there's a totally limited supply. If you have a painting by Monet, okay,
right,
there's only one painting, so there's no supply. It's a supply of one, okay, and the demand is great for a place to put your cash.
That's interesting. Tell me something before I want to talk about auctions, but before we go to auctions for a second, what I want to ask you is today when you're going into a deal today, and you spoke about syndication, you spoke about going into deals alone, and you spoke about lower LTV, lower loans that you're taking today, more cash, less debt.
Less leverage.
Less leverage. Tell me something. Today, when you go into deals around Colorado or elsewhere, you're going in alone, you're going in with partners, you're raising capital as a fund. You don't have to disclose everything, but in general, what is your method to educate the people who listen that you believe in today on how you function today?
Well, it's no different than yesterday, actually. He who walks alone walks furthest. So, to have partners and the syndicate and everything else, you're much better off if you just own a property and yourself as an investor. You acquire a property, you get the income up a little bit, you create value in the property, you put in some improvements. I just acquired a small apartment property not far from my house here in Loveland, Colorado. And all I did was paint it, put in new boilers into it, and just, made the property a little nicer looking. We got the rents up. We started collecting utilities from the utility pass-throughs from the tenants. Now the property is worth substantially more than what I paid for it. I'm not going to sell it, but I might refinance it and take those loan proceeds out and go shopping. And that's what I plan to do. When I sold the Chicago properties, I could have bought a property for $25 million out here. I didn't want to do that. That would be too much leverage. 5 times equity, I figured I could pick something up for that. But given COVID and given the political uncertainty, love him or hate him, Trump was Trump. Love him or hate him, Biden is Biden. And where the marketplace is going to be going under Biden, my crystal ball is cloudy. And so I want to be a little bit more conservative. So I didn't borrow a lot of money. I bought a smaller property, under 10 million. So now I'll watch and see how things go. If COVID disappears and if the economy turns out to be fairly decent and there's no cataclysmic changes like the dollar going to zero. Okay, it's a fiat currency. It's a fiat currency. I mean, you got to own real estate. To keep cash in the bank is insanity. I mean, every time Uncle Sam turns the crank and prints another dollar, the purchasing power of your dollar in your bank account
goes down,
evaporates. Yeah, so they're taking money out of your bank account without even telling you or having a tax, or just by printing money. And you've got to be invested in hard assets. So whether it's oil, gold, silver, platinum.
Today, definitely today.
Lead.
Here's where I want to go. Right. Here's where I want to go.
Ammunition.
Today could be a very good business. Here's what I want to ask you. I have on the show right now in front of me an auctioneer. That doesn't happen a lot of times. Tell us a little bit about it and give us the ins and outs of this business. And how do you do that? And if you still do that or you did it, tell us.
Well, I was a commercial broker in 1970, and I had a client that came to me, and he said, "I've got this property that my father owns. It's the Flying Carpet Motor Inn." There's a wonderful name for you. And it's 12 acres, and I've got to sell it in 33 days. And when I say sell it, I mean closed and out of escrow in 33 days. I lose the assignability of the first mortgage, and it was a complicated situation. In any event, it had to be sold in 33 days. As luck would have it, this is right now. There's a Hyatt on the property, and it turned into a gorgeous office building. It's right across from O'Hare Airport. At the intersection of Manheim and Higgins Road. That's 100% location now. Back then, it wasn't that great, but it was next to the airport. So in any event, he said, "Can you sell it in 33 days?" I said, "Well, I don't have much experience with that." I said, "Maybe we could do an auction." He said, "What do you know about auctions?" I said, "Nothing." He said, "Do it." So we auctioned the property off, and it went for $2.25 million. And the commission, we didn't know what to charge, so we charged 10%. So that was a great payday. I said, there's something to this auctioneering stuff. So I went to auctioneer school in Kansas City, Missouri. And I'm in a three-piece suit, and they're all in blue jeans and cowboy hats. And the instructor comes out and he says, "Looky here, boys." He says, "Keep your boots off the wall," because cowboys like to put one boot heel up against the wall. And of course, it leaves a mark. And no spitting on the floor, because they all chew tobacco. So I fit right in. Because I play guitar, in case you didn't.
Yeah, I saw that. I
love,
wanted to ask you about this later. Yeah, go ahead.
I love to play country western music, and I write music, and I'm a student of theory. Music theory is a real, keeps your mind burning. It's like bridge, playing bridge. But so in any event, I went to auctioneer school, and for several years I didn't do a lot with it. But then First Citibank was it was in Detroit. Department of Housing and Urban Development put out a request for proposal for an auctioneer to auction off 60 houses in inner city Detroit. I didn't know what to expect. I mean, inner city Detroit is kind of dangerous, and we held the auction at Cobo Hall, which is this gigantic hall there, and went there, and we sold all 60 houses for really great prices. The people who came to the auction were salt of the earth, wonderful, and it was just kind of an eye-opener. But how do you auction off 60 houses? I had to come up with a scheme, a program of selling houses. How do you show them? How do you qualify the bidders? How do you, put it on? How do you make it so that everything closes and nothing's going to not close? Well, the way an auction works is there's no contingencies. It's as is where it's condition. If it breaks in half, you own both halves. That's the Arkansas guarantee. If it breaks in half, you own both halves.
Yeah.
So I figured that the buyers would qualify themselves. Who in their right mind is going to come in and put up $5,000 to buy a house, for $40,000 when they're going to lose the money if they can't close the deal. So the buyers are perfectly qualified. Now that was back in, 70s somewhere. And so I went on to start auctioning for Fannie Mae, Freddie Mac, the RTC, Resolution Trust Company, that was mopping up the blood of the failed savings and loans during the 80s and the oil crisis. And I auctioned off the Omni Shoreham Hotel in Washington, D.C. for bankruptcy court.
Wow.
I auctioned off hotel properties in a lot of locations. So, and that brings the conversation around to what property does well at an auction, what property should run from an auction. Um, I've auctioned off properties for who was it? A university in Indiana. The name escapes me at the moment. But Federal Signal Corporation donated 188,000 square foot industrial building to them in Blue Island, Illinois, which is no big, wonderful deal. They thought it was the greatest thing since sliced bread until the tax bill hit them. And once the tax bill hit them, they realized that this donation they had to get their name off the title at any cost. And they said, can you auction it? I said, yes, but there's a low or no demand for it. I mean, it's got environmental issues. It's surrounded by thousands of other empty industrial buildings. There's no demand. And so if you're going to force it to the market, the most you're going to get for it is maybe $250,000 if there's a buyer at all. And that's exactly what happened. I sold it for $250,000 for Purdue University is who it was. Commonwealth Edison, I auctioned off a plant for them in Rockford, Illinois, when the unemployment rate was in the mid-20s in Rockford. And I told them the same thing. Who's going to buy an empty old Commonwealth Edison plant? And it went for pennies on the dollar. But when you're auctioning something that has a strong demand, and what has a strong demand today? I believe hotels have a strong demand. They're going to come roaring back as things get better and better.
Right.
There'll be less business travel, but not that much less. I think that will come back as well. But so what has a strong demand today? Apartment buildings always have a strong demand because everybody needs a roof over their head. And so they're always filled. You can always fill up your apartment building by dropping your rents. And houses. Oh my God, if you own a house, you're crazy to not auction a house. Because everybody and his brother wants to own a house and have their family in a house. So
tell me something.
Houses are always going to do well.
First of all, I have a question because you named so many asset classes right now that could work in auction. But I want to understand, when you're talking auction, are you talking in a way of because the way I know auctions, and I know nothing about auctions except of, hearing about this, hearing stories. I work with a guy who is an auction, meaning who used to do auctions, who used to buy from auctions, but not real estate, everything else, but not real estate at the time, not today anymore. But I don't know much about this. But to me, there are two forms of auction. One is the auction, like you see in the movies, you see a guy with a hammer, sold to this guy with a gray hat, that kind of stuff. And the auction that is more like a tender. That is, you put on the paper, here's the thing, give me your offers by this date, and that's it. Meaning whoever wins, wins. What type of those you were more involved? Meaning when it comes to real estate, what type of those actually, practice in auction?
Yeah, I did both of those
Okay.
kinds of deals. I did a lot of work for the trust departments of the Northern Trust Company, one of the greatest banks in the world. And for Chase Manhattan, I did a lot of their trust department auctions, the old LaSalle National Bank company. And of course, in trust departments, they're trusted. They're trusted to get the best price they can possibly get for something. So they knew that if they had something that was desirable, like a full square block of River North property in Chicago, that it would be best to do an auction sale, either a tender bid sale, as you mentioned, where you pick a date and people are going to drop off offers, or a live cry auction. live cry auction, if you have a property that's really desirable, you'll do better in a live cry auction. But if you're worried that the marketplace might be a little skinny, then you'd want to do a tender sale and maybe call people in. I auctioned off the Tycon office property in Fairfax, I think it was in Fairfax, Virginia, for the Resolution Trust Company. And we did a tender bid sale. Bids were due on such and such a date. We would invite the top 3 bidders to come in and compete if we didn't accept the high bid right on the spot. And so we had them come in and compete, and we got an acceptable price in the tender bid opening, but we took it to the live cry and invited 3 bidders in. Actually, it was 4, and we had the right to, waive the details of the sale if we wanted to. As a seller, we could invite more. So, we got another $750,000 for the property in the live cry portion of it. So, yeah, you've got to have the experience to know when to have a tender bid sale. Tender bid sale is good too, because when you open up the bids, the only one who knows what the bids are is the people opening up the bids. And the one person who made one bid, of course, knows what his bid is. That's good if you don't want the price out on the street as to how much was offered at the quote unquote tender auction. But in a live cry auction, of course, that number's on the street.
Right,
But,
they're live. Tell me something. Do me a favor. Give us like a little show. Give us like a little. Let's say we're auctioning now a hotel in New York City, which will probably happen very soon. How does it work? Let's say I have a hotel,
they should call me.
500 doors. I'm selling a hotel, 500 doors. Okay, out there. It's hypothetical, of course, for all of you that are listening. But I want to see how it works. I have a 500-door hotel. Okay, that is auctioned out, and for the buyers with a partnership already in it with one of those big chains, and all we need is an owner. They don't want to buy it. They are okay with managing it. And you are the auctioneer. How does it work? Ladies and gentlemen, go ahead. Give me that intro.
Well, first I look around and I say, oh my gosh, I haven't seen so many people since my trial. So that breaks the ice a little bit.
Yeah.
I did that when I auctioned off the Camp Jaluka resort down on the island of Anguilla. And it went for $25 million, which wasn't a lot of money. And every official on the island, turned out to the auction because this was 400 jobs on the island. I mean, this was one of the most important things to happen in the island. And it was, the air was so tight in the room that it was, everybody was just like that. And so I got up there and I looked around. I said, God, I haven't seen so many people since my trial. And all of a sudden it dawned on somebody that was a joke. And they started laughing like hell. I said, keep this in mind, folks. It's only money.
Yeah.
That's all we're talking about here. So, have a good time. Let's see if we can sell this thing at a reasonable price. And then, hey, here we go there. And how many dollars are you going to give me for them? I'm bid a quarter over there, and now half, and now 75, 275 there, and now 3 million, and now 3.5, and now 4, and now 6 million there.
I love it, but tell me something. How people in a real estate project, in a real estate property, the due diligence so thorough. When is it coming in an auction? Before, after, in the middle?
Before.
No due diligence.
That's why you got to hire somebody like myself. And I didn't say myself. Okay, if you hire me, that's great. But you got to hire somebody like myself, someone who understands commercial real estate and understands auctions. Because I put together the auction package that I put together before the auction is so thorough, because I'm a buyer as well. I've been a buyer, I've been a seller, I've been a broker, and an auctioneer.
Who does it for you? You have a team?
Well, yeah, I've got people that put together a lot of it, but you know, most
Obviously,
of
you
my,
look at it, you tell them, but you have an
I
analyst.
try and do it myself. I want a phase one in the package. I want
Oh,
to have,
nice.
I want to have a complete property inspection. I want to have the actual numbers from the seller's accountant in the package so people can see the history and project the future. I want to have all that information. I even want to have in the current outstanding mortgage and note or plural on the property because some buyers I always want to see that when I'm buying something because I know more than the person I'm buying it from or from the broker that I'm buying it from, and I might be able to take advantage of the current mortgage that's in place, even if it's got a higher interest rate. That's if you really know your numbers, you can
Legals also, you
take
have there.
advantage. I'm sorry?
Legals also in terms of deeds, ownership, all that stuff.
Well, yeah,
Those,
I develop
only liens and stuff like that.
I develop a real estate sales contract that's ironclad, totally seller favored, so that the buyer knows if they sign it, the money they're putting at risk is at risk. So the seller knows that it's sold the day of the sale. So that's an important function to have a complete property information package on the auction.
Sounds so exciting. And the last, before we say the goodbye, as we call it, and I know that you deal with art and deal with stuff, but I saw the guitars and the music, and you started speaking about this. And music is close to my heart. I'm also I was in Jewish music actually for years. I had a band and I used to record for years and years. And tell us a little bit about your love for music. Your
I was a student at I started off in college as a music major at University of Illinois. And, after giving it a lot of thought, I decided that that's not my future and switched majors and a couple times. And I was actually a chemistry and physics high school teacher back in 1970. So that's when I retired from teaching. What I found was selling is teaching and teaching is selling. So if you want to sell something to somebody, you got to teach them about that which you would sell to them. And if you're a teacher, you've got to be a good salesman to sell those to whom you would teach something to, why it's
100%.
important to know that. So I see teaching and selling as identical professions. And so in any event, I was a student at the Old Town School of Folk Music in Chicago, which if you ever go to Chicago, don't miss taking in the Old Town School of Folk Music. And then I wound up being a teacher there over the years, and I was on their board of directors. And so I just always enjoyed music. Also, a fast-talking auctioneer coming from Chicago, going out to Casper, Wyoming to auction off 120 houses in a weekend. Okay, you got to be able to relate to that crowd. And I had exactly nothing to relate to that crowd, except that I like country western music. And so I would go there and I would start my auction off with I'd play the Auctioneer song by Leroy Van Dyke. Okay, and it was $25 bid now, $30, 30 we give me 30, make it 30 bid, mama $30, give me 30, give me $30 bid. It's a great song. YouTube it, the Auctioneer song by Leroy Van Dyke. But I'd sing that song. So actually, USA Today had me on the front cover of their business section, playing a guitar in Houston, Texas. Suit and tie, and I was selling 175 houses for Fannie Mae. Fannie Mae, and they picked up that story. That was the touchstone for the story. But So I've incorporated music into my business a little bit, and people know that. But yeah, it's auctions are very misunderstood. They really do well for properties that have a demand.
Very good. Before we close, I just have last question. I don't know if I asked you. Title search you also provide in your auctions, meaning yeah.
Absolutely.
Yeah.
I do that in ordinary brokerage as well. I mean, today to get a title search is so easy. You have a friend
Yeah.
at a title company, they're probably going to get the business. And, why not have the title commitment policy? Not only that, you go through the title commitment policy and you draw a line through those items, which the buyer will not be taking subject to, like the first mortgage, other things that can be taken off title by the payment of money. It's very important to have the title opinion policy there. You also want to have any disclosures that the seller is required to make by law in there. I sold this home for $2,400,000 recently out here in Colorado, and we had all the matters on title that had to be taken care of, and just a complete information package on it.
David, thank you so much. I think this was one interesting show, and we learned so much, heard so much. There was so many new things that we heard of, and I definitely would like to keep in touch with you. Meaning, I don't know, but if the Colorado market is something interesting, but that's something definitely worthwhile looking at, and we'll definitely need to keep in touch. Stick around. I say goodbye. You guys, I hope you guys enjoyed this whole beautiful, amazing show, and I hope you learned tons, just like I did. And until the next time, you guys check out all the links about David on top or at the bottom, wherever medium you guys are watching or listening to. And of course, keep in touch with him. If you need an auctioneer, you got it. You got a real professional auctioneer right here. I know that. I definitely start looking into that, and that will be a pleasure. And the more you listen, the more you learn. You guys, I'll see you in the next show. Take care.
Thank you.